right, welcome back. Thanks for staying with us. You're watching Markets at Lunch.
Okay, time then for the Personal Finance Corner. Let's go across to Dhirendra Kumar, CEO at Value Research. Dhirendra, today we're going to discuss PPFAS, the long-term value fund. This is a fund with a short-term investment history, but it is very interesting for various other reasons. The investment philosophy of the fund is to not limit the fund manager in any way, so he can find value across the market. What is your review of this fund?
I find this fund very unique. It is a unique fund for a variety of reasons. The AMC has said that this is the only fund they will manage. This fund will invest all over, across the market. It has demonstrated that it has maintained its style purity. It has quite an unusual approach. It is quite unique with its portfolio. It demonstrates value. At the same time, in this fund itself, it can invest up to 35% into foreign stocks as well. This fund can also have fixed income. It has the leeway and the flexibility within that 35%. So this is a fund which will do everything to optimize or maximize return. It is going to be an equity fund, and it has demonstrated that. And it has, such strategies take time to prove. But this last 1 year has been very impressive for this fund. But I don't think the way this fund is conducting, the way this fund has actually established its character in the last 1 year, I think it is a worthwhile fund to consider. It is an unusually impressive fund by its design.
But Dhirendra, but the fund does not offer a dividend option at all. Do you agree with this theory?
Yes, completely. It does not, when investing in equity, and any investor's objective is to accumulate savings for appreciation. And if you are looking at, periodic income from your equity investments or your long-term investment, it doesn't make sense. And also in an open-end fund structure, anytime you are in money, you have accumulated gains, you can take it out as much as you want to, and in a fairly tax-efficient manner. So not having a dividend plan, I think, is a good idea in any equity fund. But for a variety of reasons, or maybe purely out of convention or tradition, that we have a dividend option in all kind of equity fund.
Then the fund is a little on the expensive side, with the regular fund charging about 2.76% and the direct option charging 2.26%. Do you see this as a compromise of returns over the long term?
Yes, this fund is a little expensive, but given its size, I don't think most mutual funds are just as expensive of this size. And there are other funds, very large funds, which can be a little more economical, simply because of the scale. But at the same time, I think as this fund would have been a little better if it demonstrates, because it lower expense gets aligned with value orientation very strongly. Something which costs less will generate a little more return for me, and that would have been my expectation from this fund. Everything else demonstrates that. So I'll be happy if it gets little lower, little less expensive, but it is very much in line with what the mutual fund options and the expenses that we have.
But Dhirendra, should one rather wait for some more history, because this is a new fund, and it's best funds are the funds which have seen a lot of bull and bear market cycles. This fund has not seen a bear market cycle yet.
This is a worthwhile fund to consider, and if you have 2-3 funds, it could be a meaningful addition. It could be, I would consider that if you are looking for a value fund, this is the second best option available to investors in this country.
Dhirendra, query today is from Darshan Sangvi. He wants to start investing about 2,000 to 3,000 rupees in mutual funds every month. His time horizon is 8 to 10 years. He's shortlisted IDFC Premier Equity and HDFC Top 200 Fund. He wants to know if he's made the right choice.
No, I think it's always good. The reason why you invest in a mutual fund, that you are able to diversify instantly. Likewise, if you have to invest any amount of money which you can split in the skills of 2 fund managers, it's a good idea. And given your time frame and given your expectation of return from equity, I would say that instead of HDFC Top 200 HDFC Equity, which is more diverse, greater flexibility, will be a superior option, and IDFC Premier Equity remains a very good fund. These 2 funds could be a good choice for your objectives.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.